let's move to section on activity-based costing, or simply ABC. Let me ask you something first. Have you ever wondered why some products seems more expensive to make than others, even when they don't look that different? Or why two companies making similar products may have very different cost structures? That's where ABC comes in. These systems help us understand the real cost of making a product by looking deeper into what actually causes those costs. ABC ABC is based on every simple idea. Product doesn't use money directly, they use activities. And those activities are what use up resources like labor, machines, and space. So instead of just looking how many hours something takes to make, we ask what activity are involved. How much do those activities cost? Now we are getting to the heart of ABC, how it actually works. Think of ABC like this. You are trying to understand your monthly spending. Instead of just looking at the total money you spent, you break it down: rent, groceries, transportation, subscription, and so on. Thus give you a better picture. ABC does the same thing with cost. Here are the 5 key steps of the ABC approach. Step number 1, identify activities. First, we ask, what are the major activities that happen in our business? Things like machine setup, quality inspection, material handling, and so on. These are the actions that use up resources. Second, create cost pools. Here we group costs by these activities. So we will have setup cost pool, a handling cost pool, and others. Each group collects all the costs related to one type of activity. Then we choose something. Then we move to step number 3, determine cost driver. Here we choose something that explains how much each activity is used. For example, the number of machine setups may drive setups cost, or the number of inspections may drive inspection cost. Then step number 4, calculate activity rates by divide cost pool by activity volume. Here we calculate how much each activity costs per unit. For instance, if your total setup costs are 10,000 US dollar and you have 100 setups, so each setup costs us 100 US dollar. Finally, we apply those activity rates to each product. So if a product needed 5 setups, it gets assigned 500 in setup costs. That's mean 5 times 100, which we get it from step number 4. This way, each product gets charged based on how much it actually uses the company resources, not just based on time or labor.